Good morning, trailer park traders. This is Craig. That's right, coming to you live, not from the trailer park anymore, but from my McMansion. That's right. I just wanted to go over a very interesting chart because, you know, a lot of people are still confused about this credit, and it's very, very simple. I'm using HYG as kind of a test case and on the weekly, and then I use the 1472 overlay. That's what you're looking at essentially right here. So when the 1472 crosses up, that's your start for a new Bitcoin rally, and when it crosses down, that's the reset. Now, in some cases, it's a lagger indicator, so I wouldn't go by this, but it's a very interesting relationship. From what I see, the relationship is not that HYG causes Bitcoin, but that both are responding to the same credit liquidity cycle. However, BTC is very liquidity driven. So when there's liquidity in the markets, i.e., quantitative easing, Fed easing, inflation coming down, things of that nature, then we typically get a some sort of rally. But these are all markers of time frames because there's a ebb and flow to HYG, which coincides with the ebb and flow of Bitcoin. We talk about cycles with Bitcoin, but we never talk about the cycle with credit, J and K and HYG. So that's why I'm focused on in this video. So essentially, when you get a cross up on HYG, it's approximately 900 days until you get a cross down based off the data that I'm showing you right now. Guess what? BTC's the same thing. From cross up to cross down is around 1300 days in some cases. And so that's just saying that the markets are a little bit more sensitive in BTC. Like I say, they don't line up, 100%, but they're forward thinking versus credit is just actual. It's not a market where you're trying to predict the future and getting the best price so you can get the most return. All right. So every major BTC bear market occurred while credit was weakening. Each vertical red line on this chart is a 1472 cross down for HYG. Now I've overlaid BTC in orange on here. Most of y'all have already memorized the ups and downs. But what happens is after each red vertical line occurs, after HYG begins rolling over, the sequence generally looks like credit peaks, HYG loses momentum, weekly EMA crosses down, and Bitcoin eventually enters its major reset. This happened in 2014, 2018, 2020, and currently in 2026. That's what's happening. Also, you get some sort of massive dump between those cycles, as you can see after the red line, the 1472 HYG crossover, you get a dump in credit, dump in credit, dump in credit. And that is also another indicator where we're at right now because technically you haven't gotten a dump in credit yet. You haven't gotten this huge flush out in credit where inflation drops, people get scared and run to bonds, and unemployment goes crazy. That's the invariant rule I've discussed in other um, videos. This has not happened yet for 2026. I'm not predicting that's going to happen. What I'm trying to say is, based off of 2014, 2018, 2020, we are due because there is a crossover for another dump in credit. And once again, if the engine for high beta stocks that need a lot of liquidity, like AI, like crypto, if the liquidity dries up, credit, the engine stalls. And that's where we're headed right now as a result of this. So if that's not making sense, I don't know what will, because now you can base all of your strategy around, oh, am I buying something that's dependent on liquidity? And how is the credit markets doing? Common sense, very, very simple. I got a guy up at work. He's, oh man, I bought this stock, I bought that crypto. Things are looking great. And I said, well, wait a minute here. If your entire portfolio is dependent on liquidity and that's drying up right now in the credit markets because the weekly HYG has crossed over and we are now projected for a major dump, which has happened every single time. Looking at this chart, then what do you think is going to happen to those high beta, very, very dependent stocks in those sectors, i.e., AI and crypto? They're going to dump. You're going to get more flush outs than you will pumps. As a result, price starts to tumble down. And so that's kind of where we're at right now as far as that reset. So when HYG bottoms before or near Bitcoin's new expansion, your green lines are even more interesting on this chart because now you start to see credit stabilize. And when it stabilizes, guess what? BTC is stabilizing, and BTC is getting that 1472 relationship weekly crossover to the HYG. So credit begins improving, weekly EMA crosses back, and Bitcoin begins its next major bull phase. That happened in 2016, 2020, and 2023. You can clearly tell on the charts. Now, what happened right here in 2020? Well, this is a new bull run expansion for crypto that started, and we were on our way, and then the whole thing broke because of, that's right, COVID. So it's hard to say in this situation that um, because you're in a new expansion cycle that you won't get some sort of credit reset during that expansion. It is very possible to do that, but we went on to make new highs in Bitcoin for that expansion cycle. And you can see the start, the finish, and the unknown variable that happened with the pandemic. Quickly went back up. You got new highs. People weak hands sold. Boom. So when you got the HYG crossover here in December of 2023, credit was nah. It was okay. It wasn't amazing. It wasn't outstanding credit. It was okay. That's the reason why your altcoin season didn't officially happen. It was okay. Credit okay. Why? Dogecoin needs a lot of liquidity, a lot more than Bitcoin to move it. Bitcoin's got other stuff coming in, ETFs. It's acting like a treasury from the government right now. Um, there's a lot of things going for Bitcoin. Dogecoin, it's a shit coin. It's a scam. And that's why we love it, right? Right? That's why we love it. So the measurements all together, when you look at specifically these pumps, like I said, it's around 900 days, which is coinciding with Bitcoin. So this is the order that this happens, and it's remarkably consistent. That's the key word here. It's consistent. Credit weakens, risk asset loses sponsorship, Bitcoin resets, credit bottoms, liquidity improves, and then Bitcoin expands again. And when I say credit bottoms, you're going to see some sort of black swan event where credit breaks and it dumps. Like I said, we haven't gotten that yet. I think personally, and this is just my opinion, and I can't tell into the future, we are probably due for one, and it looks like that's starting to happen now. So looking at, and that's why I have HYG right above all my credit because I can see immediately what's going on. And we can take a look at AI and lenders. Blue Owl has been blue crap. That's been a A lot of AI lending's been going through Blue Owl. So just FYI. What's doing remarkably well? That's right, energy stocks, defensive stocks. So, and I can also tell that the way I've got everything set up. Of course, using the 1472 with my amazing chart here. Gives me all my sectors that I'm watching. Right? Here's crypto. Weakening, weakening. We got a long way to go still. How much longer? Well, the forecast that I'm showing is around, let me get back to here. This out. We'll go back to crypto. Crypto. There it is. Do this. So here it is right here. This is kind of my prediction based off the averages, somewhere between October and actually February, based off these averages right here. And I've got a 2-day EMA start average. So we're getting very close. So 90 days out. However, we haven't gotten the credit flush yet. That means Bitcoin hasn't gotten its final leg down yet, if everything is equal in this world. So I'm thinking somewhere around 35 to $36,000 based off of this very, very accurate line. We're going all the way back to 2020. And if you're saying, that can't be accurate, this isn't accurate, well, let's overlay HYG. And I'll take off the BTC forecast and that. There you go. Oh, I got BTC on here twice. Do that. So this is credit. As you can see, it's a bit of a lagger based off the 1472. Sometimes it's early, sometimes it's late. I think this was, oh, that was the start, and then this was COVID right here. But this was the start of the whole thing. Yeah, it lines up remarkably well. My thing is once you start to get into that forecasting for the time frame, it's basically a rules based trade. What I'm looking for is a dump in credit, a spike in unemployment, a dump in inflation, a run to safety, and then we know the game is afoot because the next step is the Feds. And you're probably saying, well, what the hell does the Feds have to do with this crap? Well, the Feds tighten and loosen. Turn that off. It's right here. The Feds tighten and loosen. So you can't see the green from the other one, but the green here is basically the loosening of the Feds and then the tightening of the Feds. So now you're like, well, the Feds loosened here. Well, no, the Feds stopped QT. So that's why that's there. They stopped quantitative tightening. So that's why there's a green marker there. So yeah, the name of the game is before you even buy something that's dependent on a crap load of liquidity and dependent on credit and a good loose Fed environment, you need to look at the macro picture before you buy. And when you look at that macro picture, real simple question is, how's credit doing? Well, since May, we've been doing really well. But since February, not so well, or January. So this entire time, you had an opportunity to make money in sectors that are highly dependent on liquidity. And this environment is entirely dependent now on defensive stocks. I'm not just talking war, but defensive as in staples. Uh, what are the? What the hell am I talking about here? Let me save this. Where did it? Okay. So like energy, consumer, um, staples. So tech. Oh, real estate can be a defensive stock, but tech. Oh, healthcare also for a defensive. And let's get that off here. So I'm not saying healthcare is doing amazing. I'm not saying, right now you're in a war, you have high gas prices, money's rotating out of tech, it needs to find a home. Obviously, the simple play would be energy right now. And that's why energy is just going bonkers. It's going nutsoid. If I can come back over to my here, and we're gonna do this. Put candles on. And then we're gonna get to energy and like Chevron. Boom. Exxon. Boom. 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 I'm just saying this is really good for energy stocks. And the way Trump's talking right now, not that I'm a professional Trump guy here, but it doesn't sound like this war is going to end anytime soon. We went from the verbiage of it's going to be done soon to I have no clue. We may be moving troops in. And we move troops in, it's going to help energy stocks even more and war stocks. But that's common sense once again. This isn't. But why is it happening? Credit, right? Um, Dependent on liquidity. These not these stocks, but I'm just saying companies that aren't flush with cash who need that credit to stay afloat. When credit dries up, it's going to get ugly, real ugly, recession style ugly. So, but credit has not cracked yet, and that's what we're essentially waiting for. Speaking of, I do have credit right here. So you can see the red. Um, this is another good way to look at it. So this actually flipped in December, not in January. Or we had to it flipped in January. But this is a very, very simple way. Once again, using 1472 on the weekly, looking at the macro picture. I keep everything consistent, even in my wonderful indicators that I built via ChatGPT to keep everything aligned. Not that I'm forcing alignment at all. I'm not forcing alignment. I just want to look at these pipes, all of the sectors plus credit in that lens, right? TLT. Let's look at TLT because I've been wanting to jump into TLT, but the bond markets keep going up and up and up and up. So where is my TLT? There it is. Yeah. So TLT, not so good right now. Oh, that's credit market still. TLT, not so good. Here we go. iShares. I don't, I want that. So 83.49. So basically all time lows. I'm not trying to say anything, but okay, if, and I'm just throwing this out there, the prediction is correct that we are now due for a credit crash. I'm just gonna say, what the hell happened back here in 2019? COVID. And then you've had this restrictive market. I shouldn't say restrictive. 2014. Take a look there. So 2014, credit peaks, HYG loses momentum, weekly EMA crosses down, Bitcoin eventually enters into a major reset. 2018, here's 2018, and look at TLT starting to fly. Credit peaks, HYG loses momentum, weekly EMA crosses down, Bitcoin eventually enters into its major reset. Look what happens to TLT. 2022, and TLT was not very good in 2022. But we are now in 2026. And this thing looks like it's ready just to go straight up. No, I don't know. So J and K break, HYG rolls over, CDX spikes, start building TLT aggressively. That's what we're looking for right now. HYG hasn't rolled over yet. We're looking for unemployment rising, US 10-year yield rolling over, and core PCE trending down. So remember that unemployment rising, US 10-year yield rolling over, and core PCE trending down. Why? Because people don't got money. They're broke. Unemployment's in blue. What is core PCE? It's unemployment blue, 10-year yield yellow, and core PCE red. Unemployment popped, core PCE and 10-year yield dropped. And that was in 2020. Interesting, huh? Yeah, that's the invariant rule. Oh, hold on. Hello? Huh? Go back to what work? Oh, yesterday. Yeah, I went to Specs yesterday. I've totally, well, I was partially drunk. The bottle was in the refrigerator. Yeah, I got the 1836 whiskey, but they ran out of my birthday cake, so I had to get the honey. I know I'm a mess, but I had it out, the receipt. I mean, yeah. Matter of fact, what time is it? Oh, it's 10 a.m. It's time for a little glassy poo for Friday. Yeah, I'm off of work now. Time to get drunk. All right, sorry about that. All right, baby. Love you. Bye. Okay, sounds good. I know. I'm this sweatshop work bullshit is just it's frustrating to deal with over on my side. So, but I did no. I'm fine. I'm probably just gonna go. I may go up to the sauna to sweat, but I don't know. I don't. I don't think there's any in Montgomery County, so I may go down to Harris County. The one I went to last time. Yeah, it's cheap and it's pretty cool. All right, baby. I'll let you know. Love you, babe. Bye. Oh, can't a man just go to a sauna without having issues? You know what I'm saying? Yeah. So I went to Specs. I'm not going to replay the whole thing. You heard it. So yeah, yeah, the invariant rule. This is essentially what we're looking for. I'm not I'm not saying this is what's going to happen because it's a rules based. These are the things I'm looking for. I'm looking for HYG to roll over. Let's see. I can I put HYG on here? What was it HYG doing right here? Jesus. There we go. Yeah, it rolled over. That's where it rolled over. HYG did. And then it rolled over again. And this is your bull run for Bitcoin that ended. You know, and this isn't even Bitcoin. This is HYG. It's so funny that I'm looking at this because it's not 100%, but it's pretty damn close. So anyway, it's just something for your arsenal. However you trade, that's how you trade. I'm not trying to, do anything with this data other than present it. You make up your own mind. But obviously, Bitcoin needs a lot of liquidity. When credit's not doing so hot, and funding, by the way, I haven't even gotten into funding, then things start to not look so good for the economy. So the easiest way to see a major break is a credit dump. That is my clear signal that I need to start stocking. Doesn't mean I need to start buying, I need to start stocking. And then I'll flip it down to the 2 day, and I'll start looking at hopefully a recovery in a crossover and something from the feds that they start to loosen. But until we get that, we're stuck in this like purgatory restrictive market that we've been in for a very long time. It's very frustrating. And I'm completely out of the markets. I sold 520,000 4 months ago. No, I take that back. 9 months ago. No, yeah, 9 months ago. $540,000, which spent every dime of that, and then I got another 62,000 off my land. So I've got that sitting there, and then I've got another a rental house that I'm selling for 350,000 in the next 3 months. I should have that, and then I'm going to quit my job and travel a little bit, and then just kick back and look for my rural base. And then once it pops, I'm gonna enter into the market for 500 to 600 days, and then I'm gonna trade myself out of that damn market as quickly as possible and just ride the ride because the ebb and flows of Bitcoin, it happens and it happens very, very consistently. But when you talk about Bitcoin cycles, yes, the halving has some relationship with that, but the ultimate is credit, in my opinion. I haven't even talked about the halving. The halving happens like halfway through the expansion cycle. The expansion cycle starts because credit improves, in my opinion. Let me get back to here. It's ExxonMobil. Don't want to look at ExxonMobil. We go back to Bitcoin. Here we go. Here's the crossover, and we're waiting for an improvement in credit. But before we can get there, we need that final flush, that final dump. So let me overlay the Bitcoin 1472 crossovers. Okay, that's the 1472 crossovers. Now I'm going to overlay HYG and J and K, HYG and J and K. And then now you can see this is the start of the new expansion cycle. And this is the ending of it, dumping credit. Start of a new expansion cycle, ending, dumping credit. Well, there was a dump here. I know it was COVID. And then the start of a new expansion cycle, ending, and we're waiting for the dump now. So when you closely look at this, let's see. My neighbor is mowing her yard. Oh, here it is here. This is what I want to see. Yeah. So really where we're concerned with right now is the reset to start. And so when you take the dates of these three cycles so far, we've got 413 days from reset to start. That means crossover from the reset from the last expansion cycle to the start of a new expansion cycle, which averages about between 383 days to 400 days, somewhere in there, which will put us between January and April. And this is where we're at right now. The reset to start. You have the start to start, which is 1,300 days. That's what I was talking about. HYG was around 900 days. Start to peak. So start to reset is about 900 days. That's interesting. Sorry. Start to reset is 961 days, which coincides with exactly what the start reset is on HYG. Whew, boy, that was tough. That used a lot of brain power right there. Let me go back and just confirm that. Turn this off. Man, that lot was noisy. There. Okay, well, let's just do this then. Let me take that out. This is the weekly crossovers for HYG. And then we'll just take this from start to finish, start to finish, and from start to finish. Yes, I skipped COVID. All right, here we go, guys. So we get 546 days plus 994 days plus 867 days divided by 3 equals 802 days. I did my start to finish wrong. Yeah, that's right. Start. Well, that was a short one there. Start to finish. Yeah. So 800 days versus Bitcoin cycle start to finish is 900 days. Hey guys, it's putting us in the uh, the arena. I'll take that. It's close enough. Could have sworn it was better, but so the ebb and flows of credit liquidity affecting BTC and the cycle period from start to reset. All right, well, I've officially bored myself with this video. I guess what this is telling us is overall time frames are very, very hard to tell. But if you put in the order, it becomes remarkably consistent. Remember, consistency, rules based. This is the macro. The lifeblood of Bitcoin is credit. Bad credit, bad Bitcoin. Credit weakens, and this is the consistency right here. This is what I'm looking for my rules-based trade. Credit weakens, risk assets lose sponsorship, Bitcoin resets, that's where we're at right now. Credit bottoms, we haven't gotten there. We're between Bitcoin reset and the credit bottom right now. Then liquidity improves. How does it improve? QE, the feds will loosen. That's generally the major clue, but you'll start getting 1472 crossovers on the weekly. And then Bitcoin expands again. Then you're now officially in a new expansion stage for approximately 900 days. So from start to reset, 900 days essentially. Um, but time frames are just time frames. Nothing has to repeat. So why HYG matters? HYG represents high yield corporate debt, guys. When investors become nervous, they sell junk bonds, small caps, crypto, speculative tech, and AI is nothing but a speculative tech. Because I use 90% of AI I use to make my emails look a lot better. That's it. 90%. I wrote two books using AI with the assistants, but I had to write the books and then have AI clean up my writing because I suck at writing. If I was great at writing, I wouldn't use AI 90% of the time. But when investors become confident, they buy all of them, right? They buy the junk bonds, they buy the small caps, they buy the crypto, they buy the speculative tech. And the only way an investor becomes confident is if the Feds loosen and the markets get flushed with liquidity, legacy liquidity, capex money. Interest rates are zero, credit starts to improve. All these great things that we're waiting on. But right now, investors are kind of, wait a minute here, I got to rotate out. I'm kind of speculative right now. They're starting to see the cracks. But the major crack is credit. That hasn't happened yet. So Bitcoin has increasingly behaved like a high beta liquidity asset rather than a completely independent asset, guys. This is kind of the end result. So the current cycle, looking only at the chart, the weekly HYG has rolled over. The 14 EMA is below the 72, and price remains below the longer trend. This resembles prior reset phases more than new expansion phases. So that's where we're at now. That doesn't tell us when Bitcoin will bottom, but it suggests that the broader credit environment is still not providing the same tailwind that existed during previous bull market expansion. So reset to new start is reset to new start. Search JPEG. So reset to start right here, about 383 days. So we're about halfway through that at this point. So let me take this off and give you exactly where we're at on that reset, and then I shall let you go. And I shall bid you a good day, Madame Ossa. So 383 days. We are exactly at 175 days. At exactly 300. Well, we'll do 385. That'll put us at February for the new expansion. Reset to start. Reset to start. And we're missing in this area a credit dump. So we have approximately 196 days. I think that's all. Yeah, dead on. 196 days remaining. We're not even halfway through. So a lot of shit can happen in the next 196 days. All right. Done with my video. Y'all have a good day. I got to go drink some whiskey. Y'all take care. Dogecoin, not to the moon. Bitcoin, not to the moon. Walmart to the moon. Walmart to the moon. Not financial advice.